Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Sonali Basak. We're counting you down to the closing bell, and here to help take us beyond the bell, it's a global simulcast with Massar and Mike Regan. Welcome to our audiences across Bloomberg Television, Radio Originals, and those folks streaming on YouTube. 38.19 and change right now on the S&P 500. Massar, that's down 1.8% on the day, and more importantly, it is below that 200-day moving average.
A very key metric. Do we bump up against it? Do we continue to move even lower? When you look at the S&P 500, Mike, I mean, there's really no place to hide. You see most names in that index lower for the day.
And I hate to be that guy, Carol, but does anyone remember Bitcoin? Are we allowed to talk about that anymore?
We're allowed to talk about it.
But what a beta to the stock market today, down about 8.5%, biggest drop since November. So certainly just a risk-off feeling across the board. Bank stocks getting clobbered. It's one of those nasty days in the market.
Yeah, I mean, we talk about, obviously, the big drawdown that we're seeing today, not only in Silvergate, but, of course, in SVB and Signature Bank and everything that is even tangentially tied to that crypto space, even as Signature Bank points out. We don't do anything in this space, but nevertheless, I think there's this issue, not so much of contagion of crypto itself, but the contagion of confidence or lack of confidence.
Anytime there's signs of crumbling, right, within a bank sector, even though people think the big banks are fine, any signs just makes everybody a little bit nervous, Sonali.
But if the economy weakens, where do they make the money from, whether rates are higher or not?
All right, we are getting the closing bells here in New York. We've got a lot to walk through here. The Dow Jones Industrial Average down roughly about 550 points as we wait for these numbers to settle. Nevertheless, it is a down day, down about 1.7%. The S&P 500 at right around 39.18. Down 1.8%, and that is going to be a close below that 200-day moving average. The NASDAQ composite not spared either, down about 200 points or about 2% on the day, and it too is going to close below its 200-day moving average. Meanwhile, one of the big outperformers that we had seen over the past few days and weeks, now the big underperformer, the Russell 2000, lower on the day by more than 50 points or about 2.8%.
All right, big drop, as you said. We've been focusing on the bank stocks. That KBW Bank Index down just shy of 8%, Sonali, in today's trade.
Yeah, I want to talk about the sectors here, too, because if you look at it in the S&P 500, you have the financials, the banks index down more than 6.5% on the day. Autos, diversified financials down 3% or more. Materials, consumer services, insurance, real estate, all tied to the rates, all tied to the economy, all down more than 2% on the day. Every major sector down on the day today. That is the sentiment there, but you do see those eco-heavy, rate-heavy sectors down more than anything else.
All right, so let's get to some of the...
Sorry,
please.
Carol, I just on the broader market, I think this is an interesting story. The Russell 2000, actually, I just double-checked this, did actually close below its 200-day moving average. Remember, it was one of the first of the major indices to actually break above it here and held above it that entire time. So an interesting milestone here, closing about 2 points below that 200-day.
All right, fingers crossed that these individual names are actually still higher for the day, and they are. General Electric I know you always watch. Yeah. General Electric was up at more than 9% at its highs today, still with a more than 5% gain here at the close. Company coming out, reaffirming its 2023 financial targets. Larry Culp, the CEO of the company, saying also it expects profit margins at its aviation division to continue to expand over the long term as an independent business. This stock is up more than 30% in the past 12 months. BJ's wholesale club holdings also up more than 2% off its highs, but still holding on to a gain. Out with earnings, analysts encouraged by its current year and long-term financial projections. So that is a plus. And then Intel, top of the NASDAQ 100 and S&P 500, it was up about 1.8%, despite having the most sell ratings in the NASDAQ 100. It's interesting. Analysts are negative. I don't have any real reason as a catalyst, Mike, but nonetheless higher for the day here.
Yeah, well, there's one catalyst we can talk about that I think is spooking the entire bank sector. That's that SVB Financial Group, parent of Silicon Valley Bank, dropping 60%. That's its biggest drop ever. Now, you would think this is a bank exposed to crypto, but it's more a venture capital focused bank. And obviously, the VC space has had its own problems with crypto, so not completely separate. But SVB basically announcing they're going to sell some shares to try to shore up their position, and also that they've sold a big chunk of their securities portfolio at a loss, which is similar to what happened with Silvergate Bank. They're down 42% today to under $3. $220. Look at the longer chart, down 99% from $222 in 2021. Obviously, this company announced today that they're going to wind down, and who knows what that means for equity investors. There's not a clear picture exactly what will be left for equities investors at the end of that process. And in sympathy with them, Signature Bank sank about 12%. They did come out and say, hey, as a reminder, we don't invest, we don't trade, we don't hold, we don't custody, we don't lend against crypto, but they do have some crypto customers as depositors. And the big story these days, Romaine, is banks are struggling to potentially keep those deposits in place when there's higher rates available elsewhere.
I still think it's interesting here, though. I mean, we talk about this idea of how the big drawdown that we saw in financials. And I just want to add a couple to your board. Charles Schwab was actually down the most since 2009, if I get this right here, down 13% here on the day. There's no news here. And there's a lot of other names here that are big names that have really got beaten up today in the financial space, similarly just because, I guess, of just the broader concerns here about maybe what the read-through is coming out of Silvergate. Obviously, a bank that has, or I say a financial company that really has nothing to do with it at all.
I really want to throw in an idea here, because part of this is that idea that things are floating across the sector. But another idea here is maybe the tide is turning in the economic confidence after the jobless claims this morning.
Well, let me just get you to yields real quick before we move on here, because I thought that was actually an interesting tell, too, as well. We're down 18 basis points on the day for the 2-year yield. And that's pretty much the story across the board here. But then you get out to the longer end of the curve here, and we were down, well, 2 basis points on the 30-year and about, 6 or 7 basis points on the 10-year here. I think that's pretty telling here when you consider the lopsidedness of what was being bought and sold in the Treasury market today.
Yeah, and remember, those futures did actually perk up and rise after the jobless claims, that whole bad news is good news thing as far as the labor market and the scenario for inflation. But, you can't discount that jobs report tomorrow. That average hourly earnings is expected to pick up. So maybe some nervousness ahead of that. And I would just throw J.P. Morgan in there, too. That news flow around J.P. Morgan with Epstein is not something banks wants to deal with.
We got some earnings crossing the wire. Carol, you want to go?
Sure. Let's start with Oracle, if that's okay. Third quarter adjusted operating margin, that's a beat, 42%, 41.2. But let's go to cloud. This is always important. We're talking about revenue of $8.92 billion. It's a smaller player versus AWS and Microsoft, but this is key in terms of what we're seeing. And then adjusted revenue. So we're talking about top line for the third quarter remained $12.4 billion, slightly light, but the estimate was $12.41. Investors right now sending that stock down about 2.6%.
I do want to go over to Ulta Beauty here. Those shares actually higher in after hours trading here. Their 4Q EPS was a beat at $6.68, and their net sales also appeared to be a beat at about $3.2 billion here. An interesting forecast going forward here. They're actually standing by some of their operating margin numbers, about 14.7 to 15%. That's a little bit higher than what the street was looking for, and their net sales forecast of about 10.9 to 11.05 billion, also higher than what the average street estimate is.
Yeah, I'm taking a look at Oracle a little more, too, just because of that move after market. Romaine, we were talking about it a little bit earlier here, that there was a lot of confidence behind the cloud spending, but things are looking a little weaker than expected on the top line overall. They still were able to sell more hardware than expected in terms of revenue, services revenue. I'm looking at a very slight beat here, but adjusted revenue fell in just shy of expectations overall.
Yeah, it's interesting, and they did also talk about a dividend, right? So they're raising their quarterly dividend 25% to 40 cents a share. That is certainly going to be typically something that investors like to hear. But we got to look for a little bit more analysis in terms of, cloud. They've been all in and trying to grow this and come up, against the behemoths. But right now, investors, as you can see, Romaine and Mike, they're disappointed. Yeah,
if you circle back to Oracle, down about 5% in the post market. So not a good omen for tomorrow's trade. Looking at the NASDAQ 100 futures, not a huge reaction, but they are still pointed lower, so setting up for a possibly ugly open for tech stocks.
Well, let's talk about that before we let you guys go here, because I was just looking at some more of the superlatives. Interesting that the KBW index on this day erased all of its gains for the year. Dow also in the red on a year-to-date basis. And I'm curious about the fragility heading into a jobs report tomorrow. A jobs report that, at least based on the last 10 ones we have, everyone pretty much got it wrong. So it's like whatever number you see on the Bloomberg screen as far as economists' estimates, I mean, how much can you trust that as an investor right now?
You know, it's pretty incredible, guys. The KBW Bank Index fall was the most since 2020. We're not in the middle of a global pandemic today.
Right. And to circle back to the jobs, remember, Romaine, that ADP number did beat pretty handily. You know, it's not always a perfect one-to-one, but something to think about heading into that jobs report.
Yeah, definitely so. And of course, a lot of people are going to be looking at that wage data and then the big CPI report next week. I do want to get back to just some quick breaking news. DocuSign out with their earnings, but the headline appears to be the departure of its CFO, Cynthia Gaylor, the CFO of DocuSign, going to step down later this year. So she's not immediately leaving the company now, going to find a transition out of her here. And just real quickly, the numbers that they gave for the quarter and for the year appear to be a beat pretty much across the board.
Yeah, stock's up about 1.3% here in the after hours. All I'm going to say is that jobs report tomorrow, 8:30 Wall Street time, could certainly change the tone of the trade. We seem to trade from data point to data point or some kind of earnings report. So we'll see what it has to say and whether or not this trade is a different one.
But you talk about 225, which is the estimate on non-farm payrolls.
Yeah.
But as a couple of our guests have pointed out on Bloomberg Television, they're looking at that average hourly earnings number, both on a month-to-month and a year-over-year basis. Month-to-month, you're not looking for any change. Year over year, you're looking for a reacceleration here. That's not what the Fed wants to say.
No, right? That's strength, and that means wage inflation continues at this point. I don't know. Let's see what the conversation is coming off of that report, because I think that's going to either confirm that the Fed has more to do, or maybe things are starting to get a little bit weaker. All right, we got to run. We need more time. We will see you. No. We will have more time.
There's plenty. There's plenty.
Oh, thanks. Okay, goodbye. All right, that'll do it for our cross-platform coverage. We call it Beyond the Bell, radio, TV, YouTube, and Bloomberg Originals. We will see you, maybe, if Romaine allows us, same time, same place tomorrow.